when you look at the policy statement, is it just like reassuring us that, that Powell's going to follow in Yellen's footsteps? Or is there a hint that, things keep picking up, we might do 4 rate hikes in 2018 instead of 3?
Well, I didn't get your question exactly, but if what's on the minds of people, I think, is really whether we're going to see 3 as is the base case, or 4, which is a possibility, or fewer than 3, 2. And I think the likelihood is that if it's not 3, it's more likely to be 4 than 2. I think the committee is very comfortable with the economic situation. And as you pointed out in the commentary a minute ago, the view of inflation is that it is firming. And I think this puts the committee in a very comfortable position, and the indication is that they're going to stay the course as projected in December.
Well, I guess that's not a surprise. And at the same time, it doesn't seem like anything really much has changed, though, Dennis. There's been these little signs here and there. The wages might rise a little faster. Inflation is still far from target. The economy is growing, but it doesn't seem to be overheating. Is there a risk in the Fed doing too much too fast?
Well, I think that is a minority view on the committee, and there certainly were a couple of dissenters in December. They're no longer voters, but they dissented, and they basically projected that view that there was no urgency in raising the policy rate, and might as well wait and see regarding inflation. I think, yes, there's probably risk to the upside in terms of both growth and inflation, and the committee is probably watching that. But we're just seeing the firming of inflation from a position still below the 2% target. So I think the committee is, not overly concerned about overheating.
Dennis, I'm curious. We've been talking about this transition for so long, and now it's upon us between Janet Yellen and Jay Powell. And so much of the commentary has been that it's going to be a smooth transition and it's really not going to rock the markets. But do you think that the markets are going to try to test Powell in the first few days, first few weeks, and see whether he really is going to be able to maintain that stability that we've seen in the last few years? Well,
first let me say about Jay Powell is he's an extremely competent guy, and I think he's well prepared for the job. And the idea that the market might test a new chair, I don't find very plausible. I think he's pretty much committed to a continuation of the gradual rate rise policy that the committee has been pursuing for quite some time. And I think they wanted to keep options open, so the language in today's statement was minimalist. The language changes, there were very few, and that provides a fair amount of flexibility for Jay Powell to get comfortable in the new position, and from a policy point of view, a certain amount of flexibility to simply respond to whatever the data seem to be indicating. So I think this is a time to be very, very comfortable and not be overly concerned with the path of policy.
Dennis, what do you think is going to be Jay Powell's priorities in the first couple weeks of being taken this office right now? I mean, you mentioned that the economy is not overheating or not showing signs of it, but the market certainly is showing signs of overheating. Do you think he would have to be forced to act a little bit more aggressively than Janet Yellen did?
Well, I think soon to be, I guess, Chairman Powell himself will be spending time just making sure that he's in a position to speak for the committee overall, and that's a unique role. There is actually quite a big difference between being a governor or even the vice chair of the Federal Reserve and being the chair. And he has his first press conference coming in all likelihood in March, and I'm sure he'll be preparing for that in order to give the markets and the public a certain amount of confidence that the new chair is really up to the job and is in control of things. Apart from that, the committee, it seems to me, is spending some time thinking longer term, thinking strategically about the policy framework in the future under various circumstances, including the circumstances of a recession developing sooner or later, in all likelihood in an environment where the policy rate remains low by historical standards. So they're thinking not so much about the absolute near term, but about the longer term framework for conducting policy.
Alan Greenspan was on Bloomberg Television early warning about stock market bubble, bond market bubble, rising deficit, and rising inflation. I read a piece in the last couple of days that was raising the possibility of banks having risks again, leverage, et cetera. What is the big risk the Fed should be on the lookout now as Jay Powell takes the helm?
Well, the economy certainly is clocking along very nicely. So there probably is more upside risk, including inflation risk, than there is downside at the moment, at least. And so I do think the committee, or at least some members of the committee, are thinking about the potential of an overshoot, and an overshoot that goes further than they would like, and therefore having to tighten a little bit more aggressively than the gradual pace that has been communicated, I think, very effectively over the last few months, and even starting in 2015 when the rate increases began. So I think the upside risk of an overshoot is on the minds of some members of the committee, and obviously you would like to avoid having to put your feet on the brakes in a way that wasn't planned or expected, and I think that's probably one concern that some members of this committee have.
Bank regulation. Randy Quarles already raising that question. That's where Jay Powell has a lot of expertise. Can we expect a much lighter hand under his leadership, and what will that mean for the stability of the financial system?
He has a fair amount of expertise, for sure, in financial stability questions, and I think he'll take some leadership in that. What's unusual about Jay Powell is that he's done all of the key jobs for some period of time within the Federal Reserve, so he has expertise in supervision and regulation of the banking system. He did that job when Dan Tarullo left. He's overseen the reserve banks. He understands the reserve banks' operational role, and he's very familiar with payments. And certainly he's got expertise from recent months in financial stability. So I think he's extremely versatile, and he's well prepared. But it's inevitable that a new chair is going to devote, in this case, himself almost not entirely, but dominantly to monetary policy, because as spokesman for the committee, his role is so important.